Good morning, everyone, and welcome to Wednesday morning. It's Stephen Whiteside here from the uptrend.com. In the pre-market this morning, we've got stock index futures down across the board. They've been down all morning. At the same time, we've got Bitcoin leading the markets higher on Wednesday morning, and gold and crude oil both up on the day. So that could certainly help the Canadian market. Now, we were watching Bitcoin head back up to the $100,000 level. It's on a buy signal. All the bull ETFs are on buy signals, and all the bear ETFs are on sell signals. Now, what worked yesterday? Well, in our list of ETFs that we follow, it was the Grayscale crypto ETF was the big winner, up 3.43%. Then we had all the big cap crypto stocks up yesterday: Coinbase, Mara, Strategy, and we had Hut 8 make a new high on Tuesday. So congratulations to Hut 8 holders. Looking at the fear index of the VIX, we talked about this on the weekend that we were expecting from what happened last week. We expected the VIX to start moving higher. That's seasonally what it does into the first week of February. And here we are looking at the VIX on a buy signal right now. What we're looking at is we're trying to break away from 1563. We haven't done that yet. We're also looking for it to break out above the moving averages. And so if it does that for the S&P 500, for the NASDAQ, or for the Russell 2000 VIX, that would be bearish for the stock market. And we haven't seen that happen just yet, but we are seeing weakness in the futures in the pre-market on Wednesday morning. Looking at the Magnificent Seven stocks, and actually we've got 9 in our list, you can see where the NASDAQ is at the moment. Then if you look at looking back to where it peaked back in October, there's an open gap there. And that open gap hasn't been filled yet. So the market still may want to take a run at that. I think we got about $2 away from that particular target. So the NASDAQ has not filled that gap yet, and it doesn't have to. There's no guarantee, but you can see that that open gap is acting as resistance. Now, the Magnificent Seven ETF not performing as well as the NASDAQ at the moment. It also has a big open gap from back in late October. And you can see where that is. And we took a run at that in December and could not go up and fill it. And we got stuck at the 67.19 level. So if we start breaking down below 65.63, you can see that our next mathematical target is 64.06. We did not hit that in December. We may hit that in January. Now, what's not working at the moment, Apple is not working. It is currently on a sell signal, and it is finding support at the top of the open gap from back in October. If that breaks, then 250 would be our next target to the downside. Amazon is on a buy signal at the moment. We are trying to break out above 250. So far, we have not been able to do so. Then what's winning? Well, Alphabet is winning at the moment, making a new high on Tuesday, trying to break out above 343.75. If we can do that, then 375 would be our next target to the upside. Looking at Meta, we're on a sell signal right now. We're trying to hold 625. If that doesn't work, then 593.75 is our next mathematical target. And you can see we traded just below that back in November. Looking at Microsoft, we're on a sell signal at the moment, trying to hold the 468.75 level. If we start breaking down from there, you can see 453.13 is our next target to the downside. Now, NVIDIA is struggling here. It's just treading water at the moment. You can see we're trying to get back over the 187.50 level. Look 2 lines down. That takes us back down to the 175 level. I wouldn't be surprised if we headed back there in the not so distant future. Otherwise, 2 lines up takes us back up to 200, and we are struggling to head in that direction right now. Tesla's coming into Wednesday on a sell signal, had an inside day on Tuesday. We need to close on Wednesday above $454.62. And certainly that is doable today if investors want to take Tesla higher. You can see that above the 468.75 level, we've got an open gap there, and that could certainly act as a target to the upside for Tesla. Now, a couple of extra stocks that we follow. We've got Broadcom back on a buy signal as of Tuesday's close. It's trying to get away from the flypaper channel. You can see investors still like the stock. It hasn't broken down below the flypaper channel just yet. That is also true for Shopify, which is back on a buy signal. I'd be more favorable to chase Shopify back up to the recent high if it broke out above the December high, which we haven't done just yet. But investors still like this stock. They're buying the dip, and flypaper channel is still acting as support. Let's finish off this morning's presentation looking at at the area where all the money is flowing right now, and that is the world of commodities. We've got crude oil gapping higher yesterday, gasoline gapping higher, natural gas coming back. We've got all the metals still doing well. New high for copper, almost a new high there for gold yesterday. Then we've got a small pullback for palladium. We've got a small pullback for platinum. And then we've got silver making a new high on Tuesday. And then we've got silver making a new high on Tuesday. Okay, folks, that's all I wanted to cover in this morning's presentation. So far, it looks like we're going to see a little bit of selling at the open on Wednesday morning. Nothing dramatic so far. Have a great day. Next time you'll hear my voices on Thursday morning, and at that time we'll take a closer look at the Canadian stock market.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.